This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Well, Iran said terror attacks that killed more than 100 people in the central part of the country were carried out to punish its stance against Israel, the latest sign that the war between the Jewish state and Hamas risks widening into a broader regional conflict.
The attacks over the past 24 hours marked a new peak in regional tension since Israel began its war against Hamas. This after the group, which is designated as a terrorist organization by the U.S. and the European Union, infiltrated Israel back on October 7th, killing about 1,200 people. Carol, since the conflict began, Houthis, an Iranian proxy force in Yemen, have fired missiles and drones against commercial ships in the Red Sea, while Hezbollah has launched attacks against Israel from its bases in Lebanon.
All right, so a new peak. It definitely feels like this fits the definition of escalation. Back with us is Peter Tchir, head of macro strategy at Academy Securities on Zoom in Connecticut, and Major General Mastin Robeson. He is Geopolitical Intelligence Advisor at Academy Securities on Zoom from Greenville, South Carolina. It's so nice to have both of you with us. General Robeson, talk to us a little bit about what's going on in the Middle East and what concerns you most.
Carol, Tim, great to be on again. I think what concerns you most is the instability and how quickly things seem to ratchet. Case in point, the call by the Yemeni armed forces, not the Houthis, rallying all of Yemen, all of the Arab and Islamic world for quote unquote all options against the escalation of violence by the U.S. And keeping in mind that the Red Sea is a key choke point. You have the Bab el-Mandeb Strait on the south, the Suez Canal in the north. This isn't new. In the early 2000s, you recall the USS Cole was bombed in the Gulf of Aden in the port. And then you also had a German tanker that was attacked as well. So we've long had friction here. The problem is, how do you push this back and still do minimum escalation? And that's going to be the challenges, the rules of engagement that the U.S. and coalition forces engage with in trying to not escalate anymore, but send a resounding signal that you just can't you can't attack commercial shipping that are flagged by international flags like Singapore.
Yeah. Before I bring you in, Peter, General Robeson, I do wonder, would you say it's already escalating? I mean, here we are now talking increasingly about Iran, but how do you see it?
So escalation is an interesting word. On one hand, escalation means that it continues to do something worse. On the other hand, escalation can be the deterrence that causes people to go, whoa. So if you think back historically, there have been several examples where an American president has hit back pretty hard and caused the counterforce to basically say, whoa, that's a bigger cost than we're willing to pay. So the balance here is, how do you avoid escalating, as in there's a point, counterpoint, punch, counterpunch, but how do you deter without escalation any further?
All right, so let's get to the kind of investor side, investment side, business environment side. Peter, come on in on this, because all of last week, as we were wrapping up the trading year, I feel like every interview, every day we started with concerns about geopolitics, and we were watching what was going on in terms of oil. WTI crude up 3.3% today. So, and obviously there's a lot of factors when it comes to the price of oil, that it isn't just, maybe a war premium, if you will. But how are you thinking about what's going on here and what it could potentially mean for the world at large and the investment environment?
Yes, I think from one standpoint, we've been worried about supply chains since this started. And one of our views have been that even if we stay in, say, the quote unquote status quo, you would have supply chain issues. And that's starting to materialize, right? We've escalated a little bit, but it's more fear of what could happen than actual what's been happening. That's really starting to change all the shipping. People want to get their products into the US and to Europe for the holiday season. They're going to be a little bit more conservative. So I think there's going to be some inflationary pressure. You're going to start seeing that impact, availability and cost, probably later Q1, early Q2. To me, the bigger risk is what's going on with Iran. And if we have to actually truly say, Iran, you're involved, they are selling probably between 3.2 and 3.5 million barrels of oil a day, largely to China, well above what we should be allowing under the sanctions. To me, that is the really big risk. If something happens that we have to say, hey, Iran, you're now involved, we're really going to enforce we are really going to enforce sanctions. We're going to be careful about that. That's where I see oil all of a sudden spiking $85, $90, $95.
Do you think, well, General, come on back in there. Do you think we're going to get to that point where we're going to say, Iran, you're involved? This puts it on a whole different level, if you will, this conflict.
Well, Iran is involved. They send a ship to the Red Sea
True.
and basically state we're going to take action. So I think that bridge has already been crossed. The question is, what do they do when they get there? And does it take the U.S. sinking an Iranian warship, or is that too much of an escalation, to do? And that'll be the hard decisions that the U.S. administration's got to make if this thing becomes more contentious. Keeping in mind that it's a 30-day round trip if you have to go around Africa, significant increase of cost. But if you go through the Gulf and you don't have a calming, then you have huge insurance costs that come into play as well. And you have U.S. forces that are in the vicinity of that would certainly be at risk on land, were Iran to say, okay, we're going to do a counterpoint and we're going to come after some U.S. quote unquote proxy forces, but they're U.S. forces.
I want to point out 12% of global trade goes through the Suez Canal. So crucial in terms of global supply chains and global trade.
So, Peter, what's a realistic timeline for us all to be thinking about the challenges that the world is facing, not in the Middle East, because that's an impossible question to answer, but just in the Suez Canal?
I think immediately. I think people were a little bit complacent about the shipping issues. But how long do you see these shipping issues going on for? I think potentially indefinitely. I don't see anyone really stepping back from our efforts. So we're obviously trying to, threaten them and make them back down. But so far, they've responded the other way, pushed this up. And this is all without an actual event happening in the Suez Canal. We saw how fragile that was when the Evergreen container ship got stuck on a pure accident, right? It really is just a giant ditch. So this is all happening without that. You've got the Panama Canal as a real issue. And then finally, when we talk to a lot of our shipping contacts, piracy is on the rise across the globe. And some of these alternate routes are actually going to push these ships closer to, high piracy areas. So there's a lot going on with supply chain shipping that I think people have been complacent. And they've also been very focused on the oil aspect of shipping. It goes well beyond that. There's consumer products going through that. So I don't think we're going to see a COVID-like type response where we see massive shortages. But I think this is going to impact the economy. It's going to impact inflation. It's going to make the Fed's job more difficulty. And we've been far too complacent about it.
All right. To that point, Abercrombie and Fitch, this was on December 20th, they had planned to ship goods that transit the Red Sea by air after those attacks on some of the merchant ships led a lot of those major vessel owners to circumvent that route. So people are already thinking about it.
It's one thing to do that before the holidays. And, and if you're doing that by air, then you've already missed the holiday boat. Truly.
But you can't ship bulk by air.
Exactly.
Correct.
That's exactly right.
Well, so Major Robeson, what needs to be the role of the United States in all of this? And go back to, it's been a very important ally of Israel and a supporter of Israel. But what needs to be, you think, the U.S. position in all of this?
That's a loaded question. I mean, there's a conventional wisdom that says this is a time to be strong, to be aggressive, and to send a very pointed signal that causes those that would want to interfere here to go, wow, that's far higher cost than I'm willing to pay. Then there's the thought that says, no, if I do that, I'm going to increase more escalation. It's just going to get broader. And there is no magic globe here, because it is not just the action the U.S. takes, it's the reaction by Iran and the Islamic nations that will, in essence, be the determining force. The good news is Egypt, Jordan, Saudi Arabia, UAE, Qatar, a lot of the Middle Eastern countries are pretty stable right now and seem to be in a neutral position. So it does appear to be a little more about the Houthis and the Iranians who support and supply and give intelligence to the Houthis. It seems to be a smaller issue containing just those rather than the entire Arab world. That's the good news.
Hey, Peter, as Carol often reminds us, this is a story about people. It's a story about a region that has always had, in the modern day, tension. But it's also a business story. We're talking about a shipping area. We're talking about oil. How do investors adapt to this quote unquote new normal, Peter? And do you think that they can adapt to it?
I think they've been adapting a little bit. I also want to point out Israel is very big in the biotechnology industry. So there are areas that are going to be directly affected. But I think we've already seen people say respond to COVID, to Russia's actions by pulling away from Southeast Asia into places that are more secure. And I think this is just going to do more of that, right? We're going to look more and more for proximity and say, we want to be within line of sight in shipping. Heck, we want to drive to Mexico and be able to check on our plant. So I think this is going to further accelerate some of those supply chain shifts that we've seen.
Well,
you're talking about quote unquote nearshoring, Peter,
right,
that we saw in the wake of the pandemic, during the pandemic.
Yeah, and I think it was already starting. It's been continuing. Maybe people got a bit slow on that and said, hey, the world's normal. I think we are going to see a huge boom across North and South America, where countries look to say, we really have to figure out, and companies have to say, how do we work with Brazil? How do we work with Argentina? We have much better control over that access. China is much further away in terms of their ability to influence this. It's further away. It's far out of the range of the Iranians or the Middle Eastern adversaries. So I think that's going to continue. It's going to be a huge part of what the economy looks like 2-3 years down the road. And any kind of slowdown that we made in terms of that reorganizing, how our supply chains look, will be reaccelerated by this.
I also do wonder, General Robeson, in terms of how we need to be careful about boots on the ground and the military reactions to all of this. When we, a nuclear war isn't something that we can rule out. But I do wonder if the fear of that would prevent somebody from doing something rather rash. So from a military perspective, what do all countries kind of need to be wary about? How would you be advising the U.S. in terms of some of the military reaction to all of this?
Yeah, I think this is a naval and an air response, not boots on the ground. We already have boots on the ground in the region. We stood up the Combined Joint Task Force Horn of Africa back in 2003, specifically to deal with the issues in Yemen, in the Gulf of Aden, and in the terrorist attacks in both the American Embassy in Nairobi and in Dar es Salaam. So this is not new. We've been there now for 25 years. So that's a good thing, is that we're not going to be moving a lot of people around places. The difficulty is, can you get Iran to back down and to de-escalate what clearly has been a Iranian-backed Houthi attacks on commercial shipping that by any standard is unacceptable.
Especially when many have also argued that Iran would love nothing more than to see destabilization in the United States as a backdrop. Peter, final thoughts, 30 seconds. Do you anticipate in 11 months from now, end of 2024, that we will be talking about continued tensions in the Middle East above and beyond what we've all gotten used to over the last few decades?
So I think we are going to be in this kind of heightened state. I think it's going to be difficult to back down. If Israel is serious about removing Hamas, that is going to be a long and arduous process. It's not going to be easy. So, and we've kind of seen these supply chain issues within the status quo. So I think that's going to be a real issue. I still think what we're really going to be talking about, more importantly for markets and everything, is China, our relationship with China, and what is China learning from our response to Israel's defense of their own country. I think China's learning a lot, and we got to be careful there.
Peter and General Robeson, thank you so much at Academy Securities. This is Bloomberg.
VC funding across the entire continent of Africa was down last year. We have the data for the third quarter, and the value of transactions on the continent during that time declined to $1.2 billion. That's a 16% decline compared with the same period in 2022. That's according to the Africa Private Capital Association. But Ope Awoyemi is going all in on Africa. He's a founder of 2 tech companies in Nigeria and is now a partner at Fast Forward Venture Studio. It's a VC firm that backs African tech entrepreneurs. Ope joins us on Zoom from Austin, Texas. Ope, great to have you with us on Bloomberg Businessweek. We know you're excited about AI in Africa, but before we go there, you've got a really cool story. You founded 2 companies in Nigeria before coming to the U.S. and worked in the U.S. before starting this VC firm. Give us your story.
Thank you for having me, Tim. So pretty much my background, growing up in Nigeria, in Africa specifically, and I started my first company out of college, which was a web hosting company. Then the second company also was an idea out of college, which was a jobs website. And it was pretty much of me experiencing challenges on the ground and seeing jobs that needed to be done for myself and for others, and decided to solve those problems. It was also great that at that time, I had the technical skills, which is very key, especially for someone with no capital trying to start a digital company. And those two companies went on ahead to become the leading companies in that space, the leading web hosting company in Nigeria and also the leading jobs website in Nigeria.
So how is that experience, Ope, shaping what you are now doing at your firm and being involved in the venture capital world when it comes specifically to Africa? Talk to us a little bit about kind of that move and that step.
So pretty much throughout those years, I've seen both the highs and the lows of building a company in Africa, from having no capital to build and just building and surviving up of revenues from customers, to having a bigger dream and seeing venture capitalists like Tiger Global reach out back then and fund Jobberman, that was the jobs website. And I'm seeing how there's a lot that needs to be done on the continent. And I'm seeing, the youth population, the also a lot of talent who want to build and need support in building. And it just kind of made sense to me as my next rodeo to really support the next set of emerging founders.
Well, let's talk a little bit about the opportunities that you see in Africa right now, because I know you're really excited about AI. And one thing that you pointed out in your notes to our producer, Paul, is that you don't see AI displacing jobs in Africa the same way that it will displace jobs in other parts of the world. And of course, Africa is not a monolith. You certainly have to treat each country differently and each region differently. But talk to us a little bit about why you see that.
Well, I mean, it's really about the jobs at the end of the day. When you look at what the economy and the jobs look like, job distribution, in Africa, we've got 54% of jobs in agriculture as compared to the Western world, where, things are more developed. There is more non-farm jobs than farm jobs. So AI, as we know it, is displacing, more analytical type of jobs and less of agricultural jobs that actually still requires the hand in a lot of cases. So we don't expect to see AI disrupt in those cases. We expect to see AI actually support. So think about the farmer, being able to diagnose, diseases very early, right? Or being able to do better decision making as to what to do with their crops. And not just in agriculture, we'll see that in healthcare, we'll see that in education. We'll also see in a case where some non-farm jobs are currently underserved today, like in healthcare, in terms of doctor to patient ratio, we'll see AI actually help, to augment rather than to displace.
I always think about, I know you guys are focused on unlocking prosperity for Africans and your support in terms of investing in firms that have at least one African leading it. Having said that, give us a story of an investment that was a game changer, and not only the innovator or the entrepreneur who created the firm, but then the impact it had on society more broadly.
I'd like to talk about the story of Old School Africa. So Old School was a company we co-built, and the focus of Old School was to be able to democratize education, right? Especially education that can achieve success outcomes at pretty much the most affordable price. And eventually we started a school that was offering diploma for skills that could create jobs, and at $1 a day. And when we launched, it was clear that the product was really solving a real problem in the market. In the first 1 month of launch, the company was already at $200,000 revenue on $1 a day type of pricing, right? Which is kind of unimaginable, but that happened, and the company did go on to raise venture funding afterwards. And what has happened over the last 2 years that the company has existed is it's continued to grow from just offering, software engineering skills to even more skills that are more inclusive for different demographics, and helping them to quickly learn and be able to kind of earn an income, after learning. Aside that, we've also seen that company being a core partner to Nigeria's new technical skills program called three entity, which means 3 million technical talent, right? The company has now become a core partner. And think about this. If that program was launched 5 years back from now, the program would have to deploy a lot of capital that it's pretty much not really there, and try to create all this content from scratch, or have to work with foreign companies like Coursera and Udacity. But now we have local companies that have the content, revenue generating, and can support the government to even train even more people. For me, that's key impact in not just improving the lives of people today, but productivity tomorrow.
Hey, Ope, talk to us a little bit about Fast Forward Venture Studio and where it fits in when it comes to the VC spectrum. You guys have offices in San Francisco and Austin, where you're joining us, in Nigeria as well. But in terms of size, I mean, you're relatively a small player right now. How do you compete with the bigger folks?
Right. We don't intend to compete. We intend to fit them. And that's the whole idea, right? We believe the fact that there's an opportunity in Africa, but most people don't know exactly how to navigate it. We've seen folks, try to invest without having boots on the ground and understanding what's happening on the continent itself. And we've seen them, have some of those early setbacks. And of course, when you look at fund economics in general, the partners want to focus on the biggest size of the pie, right? That brings in the biggest buck. And as such, we want to help them really support companies from day one and help them scale, and then pretty much pass on to the folks that can invest in them at the Series A, Series B, and seed rounds. And that's what pretty much we've been up to. The companies we partner with, strong founders who are well grounded, work with them at the very beginning levels, do go to market strategy, and help to also introduce them to other investors who can come along the journey to unlock this prosperity.
Hey, just real quickly, just got about a minute left here. Bloomberg late last year reporting on how Saudi Arabia plans to make investments across several sectors of the African economy, energy, mining, agriculture over the next 5 years. The kingdom's investments in Africa are expected to reach $25 billion by 2030. This coming from Crown Prince Mohammed bin Salman. This was at a summit late in 2023. The role of Saudi Arabia in Africa, is that good for the investment community? Is it good for entrepreneurs overall? And again, just got about 40 seconds here.
It's too early to tell. We just kind of have to look at what Saudi Arabia has played over in terms of even investing in countries like the US, in Uber, China also holding a lot of US debt, and we'll see how that plays in Africa over time.
All right. Well, we'll certainly be watching and look forward to hearing more about investments from you in the future. Ope, great to have you here with us.
Yeah, that's Ope Awoyemi. He joins us on Zoom from Austin, Texas. He's partner at Fast Forward Venture Studio. It's a VC firm that backs African tech entrepreneurs. Ope, good to have you with us.
Like, interesting. Like, I think about years ago, right? We've talked about this before here, certainly at Bloomberg, about, you look at various nations within Africa, the African continent, and because of the need to be part of a financial system, either the use of mobile phones was used so much more quickly, kind of bypassing some of the other layers. Out of necessity. It
leapfrogged the traditional technology, so it wasn't a huge issue for...
Or having banks, right? Or facilities, because it just...
all mobile.
You can't build that kind of infrastructure.